Hi, everyone, and welcome to your Daily Five. This is Mish, Chief Strategist of marketgauge.com. And for today, we are going to do what I call good old-fashioned stock picking. Yeah, there's going to be some picks here that you might think are odd because they are really kind of at the lows. And then we have a couple of things that are more momentum, and we're mixing it up today between stocks and ETFs for a couple of commodities because I think it's good to have exposure right now to both. And at this point, risk, of course, is going to be the thing because we've had quite the rally and we're into some major resistance here. But nonetheless, right now, the momentum is certainly to the upside. So let's take a look at the list we're going to talk about. We've got gold through GLD, Bumble, here's one that's pretty controversial, the Soybean ETF, Cody, which is makeup, PCVX, which is Vaxite, which is in the biomedical space, and retail, we're going to look at W or Wayfair. And that's going to give you a good broad choice to be looking at in terms of starting new positions. Okay, so we're going to start with GLD, gold. The price of gold right now per ounce is about 2,050. The high was 2,080, and it was made in May. This is when GLD actually made a high of 191.36. But right now, of course, I feel somewhat happy about the fact that I have been talking bullish gold. Even when we dipped down here, I said it was the buy, really an unbelievable buy. But the other thing we have to remember about gold is when it starts to look great, it's actually been a sale, just like when it looked terrible, it turned out to be a buy. So there's a couple of factors here that we have to keep our eyes on. A gap up like this is extremely positive. Now, we had a gap up like this here over at that point, the 6-month calendar range high. That's what this green horizontal line is. But from that gap up, we did get, a pretty nice move if you think about it. It went from 176 up to that high of 191. So that's the importance of the gaps here. Now, if we move to this point in period of time, here's your 6-month calendar range high, and we're actually starting to get some distance from it. That's a good thing. And also, look at your moving averages. Your 50, you haven't even been in a bull phase on the daily chart in gold. It's just about to get a golden cross. Now, the question, of course, is gold still a buy? Well, it's all about the risk. And so there's a couple of things that you want to keep an eye on. If you're a short-term trader, you definitely want to use a gap, right? So if your low of the gap here is 187.52 today, and the high of yesterday was 186.80, that means your risk sits somewhere between 186, say, 82 and the low of 187.50. So that gives you, really a $2, less than $2 risk. That's not so bad for something like GLD if we're actually going to power up beyond 2080 into what I think is possible at 2400. If we come down, now if you want a bigger risk, of course, then I would use the low of this day, which is sitting at the 6-month calendar range low at 182.23, and a bigger risk even then would be probably when we at the 6-month calendar range low, but that's kind of far. So I would say if you really had a pick, maybe 180-ish would be one place, or the really tight one that I just mentioned under 187.50 down to around 186.82. Interesting on the leadership, it is starting to outperform SPY. Now that's typically a risk-off situation. We were here for a few days and then it started to underperform again. So a lot also is going to be what happens with the SPY, and that means you have to keep an eye on the SPY. 4,600 has been kind of a nice top there, and our risk indicators are pointing that that could be a top. It may not be, but nonetheless, that's also going to be more bullish for gold, because if the SPY stops moving, then it's more of a risk off, and people are actually flocking to gold as a flight to safety. And here we are on our real motion indicator. We had a bearish divergence. The momentum was just not great. And yet now we're starting to move across the 200-day moving average. The last time we were here was up in these levels. When we had that big rally up here, notice we never got through the 200. So this is showing improved momentum. And of course, if we can get through the Bollinger Band, that really would be key. The last time we've been through the Bollinger Band was here, but we never really got too far above it. So these are all, if you put together, reasons to have these plugins like the leadership and the real motion indicators, because these are the things that are going to tell you, do I chase or do I start thinking about profits if I'm already long? The next one on the list is Bumble. Now, Bumble is probably, if I had to be honest, more of a gut feeling that we could see a turnaround in 2024 in the stock. So I am kind of thinking more of a passive type of buy on this one. Obviously, you have stops that you have to honor. If you're a shorter term trend trader, you would want to wait for a second close over this 50-day moving average, and then you can use the low of today. If you're more of a buy and hold type person, I would say you have to go under this 1229 as a risk. But we are clearing the 50. We've done it before. Here's your 6-month calendar range low. So there's going to be hurdles along the way, 1560, 1720, and where we were in July, that would be up at 21. But nonetheless, what I do like is a couple of things. One is this is not really underperforming that much the SPY. And even though SPY is trading near 52-week highs, this really made 52-week lows and yet hanging in there. But this to me is the most intriguing part of this trade, and that is the real motion, the momentum indicator. This is a clear bullish divergence. So we've cleared the 50. We've cleared the 200. We'll look at where the 200 is here in price. And we've got this Bollinger Band here, which we cleared for a nanosecond here and here. But if we can get any kind of momentum and a move, let's say, up over this 1447, that would be the trigger. The next one I want to talk to you about is soybeans. Now, without getting into the underlying futures, which you obviously need to look at, but I would say that just looking at the soybean ETF right here, what I like about this one too is, yes, this is underperforming. It's been sideways action, but at the same time, it's above the 50 and the 200. It's still in a bull phase. So I'm looking at maybe a move over the 6-month calendar range, particularly on a closing basis. We've had it before. And then you would have your choice of stops under the 50, maybe under the 6-month, under the 200 or the 6-month calendar range low, somewhere under 27, a buck and a half. But if this thing is going to go at the way of orange juice or live cattle or cocoa, this whole thing that's been basing out, and that's why I zoomed out from 2022, we get through these levels here and they're not even that far away. We've got a huge explosion that could be waiting to happen. So much for you people who think that there's no inflation. Now, let's move on to Cody. Now, Cody is a makeup stock. I've liked this one before. It's been a little bit of a heartbreaker because when it started to look really good, that was the top. But nonetheless, what I like, if you look at a broader term chart, you'll see that this is over the 80-month moving average. You know how much I like that. It's over the 200, it's over the 50. So we have a second day, we need to confirm this accumulation phase. And really, ideally, anywhere between the confirmation of the accumulation phase and over the 6-month calendar range low would be a good signal. Look at this one. This is also doing pretty good, trying to actually not only outperform the SPY, but really get through this ratio line right here. So it needs more. The momentum, the zero line is important. You can see this is still in a bearish momentum because here's the 200, whereas it's clearing the 200 here. So not necessarily ready to fly, but could be one that could be establishing, again, some kind of base, getting ready to move higher if, right now makeup and fashion is still something that's going to be probably a theme. Now, PCVX is just another one of these stocks. This is in the biotech space. That's why I like it. Biotech, by the way, IBB has been beat up. But this has been holding near, again, all-time highs that came in at 55. So if we look more clearly at the present, we're trying to sit here above the 50-day moving average. We are underperforming the SPY. And of course, right now, no divergence in momentum. It's above the 50, below the 200, just like we're seeing here. And so today, after looking really good yesterday, it's just getting an inside day, which means we need to clear the high of this day. Probably for me, it would be a close over 5140. And then depending on how bullish the market looks, I would either be risking to under 47, or if I wanted to risk tighter, under 48. And the last one we're going to talk about right now is W. This is Wayfair. I wanted to give you one retail stock. This is consumer discretionary. And so what I like about this is look how nicely this is outperforming the SPY. And the momentum is starting to pick up too, clearing the 50. Here's your 200. Right now we've cleared both the 50 and the 200 in price. We haven't cleared the 200 yet in momentum, so we've got a little bit of work to do. And I would say that work is if this is really a nice, talk about W bottom right here, I would like to see a close back over the range of the 6-month calendar range low, which by the way will get reset in January, but for now, going into December, it is still a valid place to be looking at. So let's say over 56.50. If you wanted to get involved, you could say that this is a confirmed breakout right here. Risk really tight under 49.31. If you're going to pay up a little bit, then your risk probably would be to under 50. And again, you'd want to see whether or not this has some muscle to clear on the momentum, and if it does, can this get up backed up to around 70, and that would be a good risk reward. Okay, that's it for now. I hope you enjoyed this. Write me on X or on LinkedIn if you see it. Let me know what you think of the picks. If you have any ideas, I'd love to hear from you. Thanks so much, Stock Charts for TV, for giving me this platform. You all have a great day, and bye for now.